I'm going to start off this video by saying I am not a financial investor. I am a nerd that retired myself after about 10 years of working with the public in retail type jobs, warehouse type jobs, because I learned about dividend stocks and I learned I can make more money not investing in a 401k and just letting my money reinvest in dividend stocks. And I just present information to you guys in videos and I try and break it down so you guys can see what information I'm looking at, so you have the ability to do it too. And if you wonder why I do that, I have a lot of friends and loved ones I've helped personally. I can't sit down with everybody, so I make videos. So when they ask me a question, I just make a video, I send it to them, I post it on YouTube so they can watch it whenever they feel like. That's the purpose of these videos. It's never to tell you what to invest in, it's to show you what I did, what numbers I look at, what helps me determine not to invest in something. And in this video, I'm going to go over depreciation, why you never put all your money into one stock. I'm going to show you a couple ETFs or one or two to look at to make you higher earning. I'm going to show you some safer REITs. What's a REIT? A REIT is a real estate investment trust. It is like you gave a company money, they invest in real estate, and they give you a percentage of the profits. The first one I'm going to start with is AG&C. AG&C has paid 12 cents every single month for over 5 years. And I went back to the 5-year history. You can see at the screen. 5 years ago, AG&C was worth $14.24. Today, it's worth $10.24. You can see it changing at the top of the screen, that $10.24. Now, let's go to our calculator. Let's say, now you would never put all your money in one stock, if I didn't say that already. But let's say 5 years ago, you bought AG&C for $14.24. That would have given you 7,022 shares. And let's say you're not reinvesting it, you are living off the dividends. You would be making $842.64 every single month. You will have to deduct for taxes because you will have to pay taxes. It is income. But that's just an easy way to think of it. You're making $842.64. Sounds great. Now let's get into depreciation. Your 7,022 shares that you paid $14.24 for are currently worth only $10.24 5 years later. Which means over 5 years, your investment depreciated down $28,094.72. And you go, well, that sounds too high risk. What if there's an emergency? Well, think of it this way. If you bought a house for $100,000, we all know that's probably going to have problems at the current rate, how much houses cost, right? If you had an issue with your wiring, you're looking at a $10,000 bill to fix your wiring. If you have to get your roof replaced, you're looking at 8 to 15, so we'll say $10,000 for the roof replaced, right? You have an issue with your plumbing, you got to get your plumbing completely redone. You're looking around $10,000 depending on where you live for that. That's $30,000 on your investment property. That's depreciation costs you have to write off. Same thing with AG&C. It going down. If it goes down in the year, that's depreciation costs. If a stock loses value, that's a tax write-off. That's money you lost. If you're like me, you don't worry too much about it because you view it as I don't have to deal with tenants. I'm still invested in real estate. Now, you would never put your money into one stock, but let me show you O, because I was showing a relative. O as a safer REIT. And she goes, but it doesn't pay you near as much for your money. And I go, yes, but it has almost no depreciation compared to other stocks. Give it a minute, it's loading. If you didn't know, you go to Yahoo Finance, type in any ticker, any stock name, click historical data over here. It'll take you where you need to go. We're going to go 5-year history. I'm going to give it a minute to load. So you go back 5 years, you see O is worth $61.95. It's only worth $60.07 today. So let's use the example again. We have $100,000. And we bought O for $61.95. That's 1,614 shares. But O is currently only worth $60.07. So we only depreciated $3,047.02 over the course of 5 years. And we also got paid dividends. I'm going to show you guys dividends that went up over time. So if you had an emergency, but you were smart, right, and you diversified, so you had a bunch of different stocks, You're living off the AG&C income, and in your emergency, you sell the O. While O was sitting, it was making you more money than the bank was making you. And then let's branch into an ETF. We want to make a high earner, so let's do one that did good this year. But this stock only existed a year. Keep that in mind. And a lot of these ETFs only do good in their first year. You gotta give it a minute to load. There we go. So we go back and we see, wow, this stock paid a $2 dividend and $7 dividend. $2 dividend sounds great. And we go back, I think it came out in October of 2024. So it'll have its first year birthday in October of 2025. And if we bought it for $50.58, that sounds great. Say it averages $3 dividend on average. Wait, 1977 times 3. We'd be making $5,931 a month. Sounds phenomenal at first glance. But when did you buy the stock? If you're one of those people, I'm going to keep showing you the numbers. If you're one of those people that saw it go to $95, so you thought $80 was a good price for it. You have, 1,250 shares, making $3,750 a month on average. You paid $80 for that stock. It's only worth $60.48. You lost $24,400 in less than a year. You're making high dividends, but your money is losing value fast. And if you made this mistake, let me show you what bad publicity can do. Because here's an MRNY is an ETF based off Moderna. Now, if you're new to Robinhood and you want to try ETFs for the first time, you might go to Robinhood, pay $1, get $5 free stock, wait 3 days, sell it, and buy a cheap dividend stock like this one. It's going to pay you every month. But it'll go down over time. I'm always honest about that. This stock's been around, I think it has its 3-year birthday in October. I'm about to find out. I'm not a computer, so I can't memorize every, 1,000 ETFs and all their numbers. But yeah, October 24th, 2025, it will have its 2-year birthday. And it's $20.37. Next day it was only 19 and then 18, so we'll say 19. Say you put all your money in this. You wouldn't do that, but say you did. I did that wrong. Hold on. That was not 18. Why am I doing numbers wrong? Divide 19. 5263. 5263. Remember, you have $100,000 and you're making, okay. You're making about 40 cents every month and $2. See, that $2.64, a lot of people put their money into it. And remember, MRNY is based off Moderna. mRNA. Moderna got some bad publicity. And even if it recovered a little, Yield Max ETF mRNY didn't. See how much it lost? And it kept losing. Now, a lot of people panic sold, and they were lucky to do it at the right time. So we fast forward today, $1.75. In 2 years, you lost $97,789. Your house might as well burn down if you were renting it out. Now, this isn't real estate. This one's an ETF. But the point of me showing you this is you want safe stocks. You want stocks that earn you more money. You want all kinds. Now, most people, when they invest in the stock market, they day trade. I'm not going to show you that. It's too high risk. Yeah. If you care about margin investing, I got a video on that. But most people buy a stock one time, they let it go up over time. That's how they build their generational wealth. And a good one to show for that is AVGO. They've been going up. They just made a deal with ChatGPT, which skyrocketed them again. It's taking me a minute to load. So, there we go. We'll go back a year. This one's, I don't know how long this one's been around, but say you bought this stock, it pays a tiny dividend. If you bought this stock in September of 2024 for $158, you're up to $361.81 as of today. That Chat GPT news was recent, and you can see it skyrocketed. It gave great publicity. All it takes is one bad news press to see the stock tank. So you would never put all your money into one. This is just showing you guys one good one that's growing pretty good right now. We're in an AI bubble, so all these AI stocks, so all these stocks that work with AI or anything tech-based are doing pretty good right now. But be careful, because there is a high, and then it'll fall fast if they have anything bad happen. Any blocks, you get the point. So you want stocks that I call your safety stocks, right? You want stocks that pay you every single month so you can quit your job after you have enough of them. You want high earners. The ETFs are your high earners. The safe REITs are still paying you every single month, but you can sell in them in an emergency. I'll try and put out new stocks. I try and do stocks every week that I release. Every single Wednesday, every single Friday, I release ETFs you can buy that day that will pay you 2 to 3 days, depending on the brokerage. Because as I make videos, it helps me memorize data. So it helps everybody involved. People get to see things for completely free. And I'm memorizing things so that way I can spout it off the top of my head later. Do I make mistakes? Yes. Is it free data for you guys to use and look into? Yes. I think that pretty much covers it. Be smart. Never put all your money into one thing. If you want to retire early, retire early. If I didn't mention, you can set your brokerage to automatically reinvest dividends. If you hear growling, that's my stomach. That means it's time to go. But you guys get the point. Have a great day. Happy investing. Reinvest your dividends. Make as much money as you can. Retire early. Don't work for somebody else. Work for you.